Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Rollick White, and I'm coming to you live from another beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a focus on trading strategies and techniques that he uses when trading the A line. So what's he going to be talking about today? He's going to be talking about what exactly is an A line setup. He's also going to share with us why he loves to trade these A lines, what the ingredients are that go into the perfect A line setup, including volatility, smoothness, slope, extension, option liquidity, and profit targets. This is going to be a meaty session, and I know you guys are going to enjoy this. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, the chat is open to everyone, folks. So remember, we do have some ground rules. Number one, always be kind. Number two, keep on topic. Number three, no political discussions allowed. Number four, keep those side conversations to a minimum. And remember, focus on the education and information that Roger's going to be sharing, because he's here to give us an edge and to help us all become more confident and consistent in our trading activities. Now, for those of you that joined us this morning at 8 o'clock for Roger's pre-market open, he shared a bunch of information with us, including and starting with what's on his small cap watch list. And I'm going to copy that, and I'm going to post that here in the chat panel for those of you that may not have seen these. Once again, this is what he looked at this morning. The key to his selections here are price action, but more importantly, extreme volume. Now, remember that small caps are not market dependent. They're not driven by the normal things that drive the markets because the institutions aren't involved at all. They don't put any money into small caps. All that volume is being driven by retail investors, number one. Number two, when you see these opportunities, once again, he's showing you what's happening pre-market, but don't trade these until normal market hours. And if, for example, you don't see an appropriate entry before around 2 p.m. Eastern time, bag it, forget about it. It's not going to be there, and never hold any one of these positions overnight. Now, let me take a quick look at those right now to see if anything's doing. No, I don't see anything happening on any of these. Potentially BRFH. It's at 396, and the target, what was 460 or 440? That might do something. But once again, Roger expects that there's going to be a pop in the first couple of hours or so after the market opens up, if there's going to be follow through on that pre-market volume. And he's promised that he's going to hold a special session on how to trade small caps in the coming weeks. So that's what we've got coming up. The next thing that he did is he shared with us what are the catalysts for day. What are the things that are potentially going to drive the markets? And you know the definition of a catalyst is information that is known or will be known during the trading session, but is not yet fully priced into the market. So, number one, Fed data. There were jobless claims that came out at 8:30, and they were good. They were better than expected, and they were good. That's a nice contrast to what we saw last week when they came in higher than expected. We also saw that Philly Fed manufacturing came in way better than expected. I mean, by a factor 100. So that was kind of a pretty big surprise. He also said, let's pay attention to the mags. NVIDIA was down 1%, Netflix plus percent, consumer discretionary, DRI, Dryden down 9%. Restaurants really taking a hit here. Nike was down 1%. Technology sector, Intel was up 23%. And I've already seen comments from several people that are in on some calls with Intel that investment, that came in from NVIDIA certainly didn't hurt things. Basic material, Nucor was down 4%, and Japan also, Nikkei continuing to make all-time highs. And so those were the key catalysts that Roger had his eyes on. And as far as his daily pre-market watch list was concerned for stocks, he had several shorts and several longs. And I'm going to go ahead and post those in the chat panel for you as well in the event that you did not see these. Once again, this is Roger's pre-market watch list and a number of opportunities there. I put an asterisk by DOCU, DOCU, because Roger really liked this one. As a matter of fact, he made a mention to Matt potentially looking at a trade on that one. But this is what his pre-market stock watch list look like. And in these VIP sessions, he's going to start off by telling you what he sees now. And in many cases, it's a carryover what he sees in the morning, but there are times when, once again, there's new information or new tickers that he wants us to keep our eyes on. Lastly, folks, here were his closing comments before the market opened. Yesterday's markets all rallied after the FOMC rate cut and presser. They sure did. However, most of those gains were disappearing overnight. Interestingly enough, bonds were retreating. As a matter of fact, they were nosediving throughout the 8 p.m. morning session, and momentum levels were falling against the broad market. The Mag 7 remains up, significantly overexposed, and continuing to drive the QQQ higher. And as Roger says, quote unquote, I smell a rat. He feels that the SPY and the QQQ are way too toppy. He advises against adding positions. As a matter of fact, said today might be a great day to take profits. Keep an eye on the RSP and the QQE for broad market activity, and very concerned that, once again, the bonds are telling the real story and everything else is fake. That's essentially what he shared with us as he closed today. Be interested to hear what his comments are here midday. So once again, I'm delighted to see so many people here. I will not try to thank you all individually, but just thank you all for coming and supporting us here. The agenda for today is going to be focused on trading the A-line. And Roger's going to share with us exactly what an A-line setup is, why he loves to trade these A-lines, what the ingredients are that go into a perfect A-line setup, including volatility, smoothness, slope, extension, option liquidity, and profit targets. Now, once again, folks, if you've got any questions during Roger's presentation, please type them in the chat window, and we will address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone, and we only have a couple of ground rules here. Number one, always be kind. Number two, keep to the topic. Number three, no political discussions whatsoever. Number four, keep your side conversations to a minimum. And number five, and most importantly, just focus on the education and information that Roger's going to be sharing, because after all, he's here to give us an edge and to help us all become more confident and consistent in our trading activities. Now, Roger's going to be joining us momentarily. I believe he's probably, I'd love to say this, he's in hair and makeup. He loves it when I do that. But anyway, he'll be joining us any moment here, and we have a great crowd. And once again, it's good to see everybody here. I'm Raleigh White. I'm here in Austin, Texas, even though it looks like I'm at the New York Stock Exchange. I just love that backdrop. And I love the fact that the floor is cleared because everybody is going to be listening to what Roger has to say. But delighted to see everybody here. I know that we have a tremendous number of people here, not only throughout the United States, but a number of international folks that join us for these sessions. And we're certainly delighted to have you here with us. So let's see here. Yes, he did. Roger did look sharp this morning. He's feeling frisky, although he advised today that today's not the day to be frisky. Anyway, I know that we got the full contingent in the room. Roger, it's great to see you, my man. Matt, always wonderful to see you. Guys, here we are, Thursday, midday, post-FOMC interest rate cut. Palapalooza.
I
And you know, Roger, I thought you were just awesome this morning. I love it when you said, I smell a rat.
I do.
Okay.
I smell a big rat with the bond market.
And not only did you just say it, then you took the time to tell us exactly why. So, is there still a little odor there in the air here as we are midday?
Yeah, yeah. Let me as a matter of fact, let me congratulations, Paul. That's fantastic.
Oh my
Uh
God, yeah, Roger, people that jumped in on the Intel, taking calls on Intel, are
nice.
making bank.
That's excellent. Excellent. So happy to hear that. I will say hello to everybody real quick, but just wanted to point out again, look at what happened the minute we touched this line on the SPY. It started coming off. We're at the VWAP. We've been struggling at the VWAP, and there's a good chance we'll come right back down. I don't like where we're at right now. And again, I've explained it. I explained it in great detail yesterday, and I explained it in great detail again this morning. So I don't really want to get into it unless you have a very specific question. But my analysis has not changed. The bond market is telling me a very, very different story right now. And also, market internals are not that strong. ADD is only up 596. So the Volt looks good. The Volt does look good. But honestly, I'm just this 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 thing here is this thing here is just too much. It's not. It's like a rubber band, and the rubber band is like. Yeah, Matt has a Silent Bob hat on. That's a good one, Moondog. That's a good one. All right. Let me say hello to everybody. We got Richard, we got Dave, Deanna, Sassy Trainer, we got K Lopez, Landon, RP from Spain, we got Mike, James, and here we have Bugs. Good morning, Bugs, or good afternoon. We have Marina, we have Paul, we have Gus, we have Ivano, we have Wesley, we have Jill. Good morning, Jill. Good afternoon. Stefan, Jeff, Jeremiah, James, Mike Lai, Zoom user, Peter, Stacy, Moondog, Stan, John, Joel, Randy, Kurt, Cyrus, Shannon, Lee, Jacques. Jacques is here. Walt, Matt. Jacques, it'd be kind of funny if your last name was Cousteau, right?
So,
Jacques. That would be that would be so cool. Matt, Andrew, Marty, Eliza. That's a nice name. Robert, CJ, Wes, Dr. William, David, Brendan. How are you, Brendan? Good to see you, Brendan. Chad, Hank, Bob, Michael, Salaire, Jeff, Sandra. Um, Max iPhone. Hello, Mac. Timothy, John, Phil, Jonathan, Dom, Ellen, Andrew, Paul, AJ, Cyrus, Tim, William, John, Maria. How are you guys? I hope you guys are doing fantastic. I hope you guys are doing really, really well. And again, I do smell a rat. I don't believe we're going to stay up here very long. I think we're going to have a rotation into defensive stocks real soon because this is just getting a little ahead of ourselves. And I've explained all that in the morning, and I just don't want to get into it again because we have a lot of stuff. We have a lot of stuff to talk about. My mic is going. Is my voice going in and out for anybody?
no, Roger, it seems like when you move your head, for example, to your left, your volume drops off. So I don't know if you need to eat the mic or
I got
don't
it.
eat the mic. Don't eat the
All right, all right.
mic.
Hopefully that. Hopefully I'll try to be a little more
That's
considerate of
perfect.
that.
That's beautiful.
Here, let's.
It's a wonderful mic.
It's an amazing mic. Yeah, it is. It actually is a fantastic mic, but it's very directional. It's
Yep.
it's a dynamic directional mic, and literally like speaking like this and speaking like this. I could talk. Well, you're a musician, but I can literally have a lawnmower next to me here, and you guys would hear it like I wouldn't be able to hear myself, but you guys would be able to. You guys would faintly be able to hear it, and
Yeah,
I'd be
it's
able to
got that
speak
noise
to it.
canceling. Yep. Yep.
Yeah, 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 yeah. It's a great mic. Okay. Um, okay. So mags are coming off here. They're not really looking fantastic. Spice coming off. Let me give you my list, and then I want to talk about a specific quality of a stock that I look for that's called the A line. I'm going to give you guys a real good education in what a perfect A line stock looks like. And we've been seeing a lot of success from A-line stocks. We've always seen a lot of success from A-line stocks. And a lot of people call the trade name, there's a trade name for these kind of stocks. I don't call it by the trade name, but there's a trade name. It's called pullback opportunities, okay? Pullback opportunities. I just call them A-line stocks. Okay. All right. Now, I just think it sounds better. Somewhere in that ballpark, Hefe, we had a year where we went a full year with a 100% win rate. Hey, Matt, you know what? That's a good thing. Before we begin, I always like to start with what's in it for you guys, right? What's in it for you guys? Why don't you show everybody the A-line members area spreadsheet? Can you do that, Matt?
Yeah.
Yeah. I think that's the first. No, not the same lesson, Christopher. Not the same lesson. Different lesson today.
The tracker, right?
Yes. Here, let me unshare my. Am I even sharing my screen? Yes, I'm sharing my screen. Let me unshare my screen. Now, we're not going to have the same lesson as yesterday. The silent Bob. That's funny.
And you know what, Roger, to that point, if anybody would like to have a link to any of the prior VIP sessions, all you have to do, and I'm just putting this in the chat panel, all you have to do is go to Roger's YouTube channel and everything is recorded there.
Okay, so there it is. There it is. Look at those options. Look at the profit factor, 2.12. Beautiful.
Wow.
Now, this is after 52 trades, and we have one open right now. The last two trades, 21% return, 80% return, 136% return. So you could see here, we had a run. Go back to where we had go a little lower, Matt, where we had 100% run. Just scroll a little lower. When we first started, we went on a 100% run. And then we had a couple of losers, and now we're at it again. Yeah. They were like all grouped together, and then we're at it again. So we're on a really good streak right here. Overall, the win rate is not 90%. It's 86.26. Just really, really good. And the median hold time is 2 days. The profit factor is fantastic. Everything is beautiful. Let's put it to you like this. I am so proud of this program, I can't even begin to tell you. Now, how often do you go on a webinar and somebody shows you a spreadsheet inside the members area of a program and says, this is exactly what I want. This is beautiful. This is what everybody's track record should look like. It's not good. I think it's about as good as it gets. I mean, this is beautiful. Okay, and today I'm going to teach you how I generate these trades. Doesn't that sound lovely? So here, that's what's in it for you. That's what's in it for you. We're going to talk about how to generate this. Talk about transparency. Can't really get more transparent than showing you the members area, okay? That's what's in it for you. Okay. Thanks, Matt. I appreciate it.
Yep.
And I know we still have some folks coming into the room right now. So let me go ahead and share my screen. So first, I'm going to give you my stocks, my watch list stocks, okay? That's beautiful, Phil. That is a fantastic, that's a very nice testimonial. Very nice. Excellent. Look at that. Feedback is good. I'm going to go ahead and.
I got it.
Okay, thank you, sir. I'll let you do that. I've got other fish to fry. Hey, Russell, Raj, James, Mike. Hello, everybody. Okay, you guys should be able to see my screen because I could see my screen. I'm going to give you stocks right now. Some of them may be A-line stocks. Some of them may not be A-line stocks. But these are the stocks that are on my watch list, and we're going to start with the short side first. AMD. Why do I like AMD right now? Because AMD looks like it's breaking below this level. It's not ready yet. It hasn't confirmed till about 149. But when it does, the target will be the 100-day moving average. And by the way, AMD has been one of the best looking stocks. I will, Tim, in a little bit. AMD has been one of the best looking stocks right now, the entire bull market. What's it doing now? That's a red flag, folks. That is a red flag. That's not really great. Okay. That's a big, large cap stock. Let's see what NVIDIA is doing, just out of curiosity. Yeah, market's making all-time high. What's NVIDIA doing? It's coming off. You got to ask yourself, what two stocks were leading this market higher for years? Right? Right? Think about it. Look at NVIDIA. Look at this run. So we got to be cautious. We got to be cautious here. Okay. All right. Next, and by the way, NVIDIA's not on my short list. It's just AMD, but AMD's not ready. It has to break this level. And the target is right here. Okay. Not ready yet. Next one is Cracker Barrel. Boy, oh boy, did they shoot themselves in the foot with that marketing scheme that they did. I don't really even know all the details. Matt's cracking up. I don't really know all the details, but I know that they didn't do themselves any favors.
And as you
They're
pointed
clear.
out, Roger, the restaurant stocks are really getting
The
beat.
restaurant stock, yes, the restaurant stocks have been getting really. This is not an isolated incident. Yeah, and not just Raleigh. That's you're very very wise in saying that. Not just that, also the supermarket stocks.
Supermarkets too, because I know you pointed out Dryden this morning, and it's just
Yeah,
like, whoa, yeah.
Albertsons. What is it? SFM. I remember ticker symbols, but I don't remember names. SFM. What is SFM? I'm going to type it up right here. SFM. Sprouts.
Oh, Sprouts, yeah.
Sprouts, restaurant DRI was not exact. There, a lot of food, restaurant, supermarkets. A lot of those stocks are just not doing really good right now. Okay, again, FYI. My wife absolutely loves. Every time we go on a trip, she forces me to stop at Cracker Barrel. She loves. I don't even. Yeah, she loves the shop there. She likes those tchotchkes that they have there. The tchotchke shop gets her every time, and my daughter too. Uh, okay, so you know how I always tell you guys some stocks are choppy. This is about as chop. This is just pure chop. This is very very choppy. That's a grinder. It's chopping, but it's at a downward slope. So that's a grinder right there. We talked about that yesterday. Okay. Here it's not a grinder. Here it becomes a grinder. Okay, doesn't mean it's bad, but you don't want to buy a breakdown on a grinder because it'll grind you back into the range. Okay, but selling or selling, whatever I'm saying, buying, selling, it all means engaging with the stock. But selling it near the 15-day EMA when it's falling down or near the 8-day may not be the worst idea that I've heard. You too, Michael, huh? All right. TGS. Look at that. Falling down. Nice look. So far, I think this is the nicest one that we've seen, and this one does look ready, but I would venture to say that the option liquidity is going to suck. And I'm right. See, I don't like to be right. Usually when I'm right, it doesn't end well. But it's only $20, so you may want to partake on a pullback to the VWAP. Not bad at all. Not a bad short. Not a bad short. And this one I've been giving you guys every few days for a few days now. I still like it. It's getting starting to get a little deviated here. But maybe on a pullback back to the 8. But for a stock, a large cap to go do this on a higher volume, in this market environment where a lot of stocks are sitting right at the 50-day moving average, that's fairly impressive. That's pretty impressive. Excuse me. Okay, let's look at the long side. One thing I want you to pay attention to, look at the stocks that are really thriving right now, the financials. So I'm not opposed to engaging with financial stocks right now. They don't look too bad as long as they're not overextended. And that's the big problem I'm having with a lot of stocks right now. They're overextended. Okay. But I'm just giving you heads up that this ETF, the sector looks good. Now, I usually don't like sectors because I can usually find stocks within the sector that look better than the sector. But as a FYI, this doesn't look bad in terms of what I'm seeing, in terms of where it's moving and all that. Although, as I said, there's probably better financial stocks out there right now. Okay. Stocks that I like. Palantir. I like Palantir once it gets above this resistance level, 176.87. We're almost there. Got it. We got to get above this area. Look how well it's my levels work. We got to get beyond that level, okay? All right. Hood looks really good right now. Financial fintech stock looks really good right now. I may, once it gets a little lower here, I will probably want it again. I just don't want to buy breakouts right now in this market right now because my thesis is that the market is slightly overextended right now. Look at this, guys and gals. I mean, look at this. Look at that green line, right? That right here, that right there is that green line.
Hmm.
Look how strong it resisted this right here. That's pretty strong. That's pretty strong. That's a strong resistance right there. And it's literally been, and then since then it's been a low mark. So we had a nice strong trend. We got to the resistance. It hit it hard, backed off, and now it's been just doing nothing. So again, I'm just Genevieve, I think it's just on your end. Okay. But overall, the stock structure looks really good. Coin. This stock, I asked you guys a trivia question today in the room. You guys, most of you gave me the right answer. It's above the 50. It's above the 50-day moving average right here. And it's in the gap. Highly, highly likely I will take this trade in gap to green. Or maybe the next stock. They both are looking similar. But I really like how this looks. Right, Matt?
Yeah.
We agreed that
Yeah.
either this, okay. And
Or the
then
other one.
next, what'd you say?
Or the other one, but I like that one better.
Okay. Or this one.
Yep.
Yeah, I do too. I agree with you. It's a little more in the gap. But I wanted to show you guys. And you still have all this. Yeah. Yeah, you got to, I do like this better. He's right. Similar, very similar to the previous one. Nice gap here. Nice breakout in the gap. Gap to green. Very nice and a nice trend. Okay. Giving you all these premium stocks for free. All right, Meta. Meta's a nice pullback. That's a very, very nice pullback, and it still looks like it's got more upside to go. There's no real resistance till about 794, so you have a little room. Definitely something that I'm considering looking at on my radar. Doesn't look too bad. GLW. Really nice look to it. Real nice stock. I probably would buy this today if it, you know what? Why not just set an alert? Okay. The cost of the options, well, let's take a look. You know, VIX is only at 15. It's not at 20 or anything. And we're past the Fed report. So the next day or so, the option volatility should cool off pretty good. I'd be worried about option prices when we start moving above 20. We're at 15. It's really not that bad. When you start looking at zero DTE options on the SPY, and what you're used to paying like $2, $3 for is now starting to go for $7, $8, $9. That's when we have a problem. Remember that, Matt?
Yeah.
That's when we took a big dump on A line. Well, that's when we took a big dump on everything. That's when Trump was threatening to fire Powell the first time, and the market just till he's like, no, I'm not firing anybody, and then the market came right back. But it just like everything just fell apart. Yes, it is. Tomorrow's quadruple witching. On Monday, we change our VWAP levels, our quarterly VWAP levels. Okay. And I have one more actually here that I like. That's HPE. Still not overextended. Looks a lot like this, like AbbVie did yesterday, which I still kind of like. So AbbVie, and HPE. I like them both. Okay, I promised to give you guys a couple of cool lessons today, and I'm gonna show you. You want me to look at SMH? I could look at SMH. Sure. Way overextended. Way, 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 way overextended. Like grossly overextended. Here, look here. I'll show you. We can look at it mathematically. Okay, look. And here's how you could tell. Where's the 8-day EMA? The 8-day EMA is at 306.18, just 306, okay? What's the ATR? $5. Okay, what did I say this was? It was at 306. So 306 plus $5 is what? It's 311, right? Where are we now? Okay. 1.5 ATR is 1.5 ATR is what? It's 750. 750 added to here, it would put to 306, 750, 113.5. We're at 317. Or that indicator that Matt keeps telling me he's going to make for me for what was the ticker? I look through so many tickers every day today. Or we could just do this. Instead of doing all that math, we could just do this. That's all we have to do. How often have you seen it above this level? Let's do a little visual back testing, okay? Okay, let's tell me the last time you saw it above this level. Okay, here we go. It goes above the level, and then it goes right back into that level. See that? It just doesn't mark. It's got too much. It's too mature. The news would have to be, extensive. And it's easier for it to happen to the downside, by the way. Downside moves are more punchier. See, look at this. It starts to come up, right? And then ba-boom. So, and again, I'm not suggesting, folks, please don't get me wrong. I'm not suggesting like any kind of a crash or anything. I'm just telling you, this is not, and I'm going to tell you, do you know why this is happening today? I'll cheat. Here, I'll cheat, and I'll tell you why. Because of Intel. Okay? If Intel wasn't doing that today, SMH wouldn't be as strong.
Yeah, good point.
I'm just being factual.
It's bigfooting the markets, there's no doubt.
Yeah. I'm just being completely factual with you. Okay? That create mania, that dotted line is the standard deviation of, it's 1.5 times the 10-day ATR away from the 8-day moving average, exponential moving average. No, Paul, they're not. They're 10-day ATR multiplied 150%, added and subtracted from the 8-day moving average. You know that example I just gave you guys here visually? They just do that mathematically for me. That's all it is. So it takes 1.5 times this, right? And it adds it to the yellow line, and then it subtracts it from the yellow line. That's what that is. It takes 1.5 times this. It multiplies this 150%, and then it adds that number to here, and then it subtracts that number, adds it to here, and then subtracts it from here. Do you guys now understand what that is? So you can do, that's why I have the ATR here. And I'm asking Matt, and he spent like 40 minutes trying to get them to match. He couldn't get them to match for some reason. I don't know why, but I'm not going to figure it out. He's going to figure it out. So this is about 750, right? You add 750 to this line, which is at about 306. That's the X, and you get about 313.50, and we're at 317. So that line is like right here, somewhere, like right there. No, Randy, we don't play that game around here. No. That's what beginners do. That's not what professional traders do. We don't get in front of a freight train and decide when it's going to stop. We don't do that. Okay. All right, let's continue. We'll answer all these questions later. So I want to show you something important. So And ironically, what I'm going to show you right now is another way to do this. I didn't even think about it, but it's actually the biggest component to A-line, and it's the biggest mistake people make, and it's actually completely tied to this. But I'll show you another way to do it that I've been using it for A-lines to see if something is overextended. But let's start with the A-line. What is the A-line? So I always tell folks that if I started trading, no, if my kids came to me and they said, "Hey, Roger, we want to start trading. We want to start trading. We decided we're not going to go to vet school. We're not going to go to law school. My 12-year-old is not going to be a unicorn. You know, she's 12 years old, whatever. They want to be traders." That's where I would start. I would start with the A line. And the reason I would start with the A line, because the A line gives you a really, really good structure, a really, really good structure on what not to do, rules not to break. And the A line follows the following rules. The principle of A line is based on a chain is only as strong as its weakest link. Okay. And when you take, and this is another reason why people don't and cannot replicate the A line from the beginning without the software, without me, or without the tools. So pay attention. It's simple, but it's elusive. In order for the A line to work, 3 or 4 things have to combine. Unfortunately, and I've learned this from listening to a lot of people. Unfortunately, the problem most people have is they get really fixated on one thing. Accumulation line, John, stands for accumulation line. Folks get fixated on one thing, and then their eyes start excluding other things because they start mentally in their own subconscious mind putting more weight on one of the items versus another item. You can't do that here. You can't do that with the A line. So one of the reasons why I really like the A line is because the A line makes sure you have a couple of all things have to work for you to have an A line. If they don't all work, you don't have an A line. And what most people do is they start, and I've had a lot of clients do this, a lot of our members do this. They start looking at the 8-day moving average, and they all of a sudden think that they've discovered the Holy Grail. And I come and tell them, I'm like, guys, that's just one part. There's 4 parts. No, Roger, no. It's just, okay, all right. And then they come to me a year later. They're like, yeah, I tried using the 8-day EMA, and yeah, it's a little more complicated than that. Several things have to come together. If they don't come together, there's no soup for you. Let me tell you what those things are. You need to have a stock that's trading in line with the 8-day EMA. That's the first thing you need. The second thing you need is you got to make sure the stock is not too overextended above the 8-day EMA. The third thing you need to make sure that the stock is not too choppy, not too gappy, and that it has a real clean trend. 90% of you can't do that well. And then you need to make sure the stock has a very nice level to it, a very nice slope to it, and that slope is holding steady. So if you can get all of those things together, you got yourself a perfect A line. That's what an A line is, okay? If your slope is too steep or not steep enough, there's no A line for you. If the stock is slightly overextended from the 8-day, there's no A line for you. If the stock is too choppy, gappy, not volatile enough, doesn't have a good ATR, it's not going to be a perfect A line. All of these things have to come together. And then there's other things that I kind of keep to myself. But I do tell you the 99%, and these are volume related things. So I explain all this. I explain all this to you in detail. And again, the problem is not getting one of these things. The problem is most people have a problem getting all of these things. Okay? That's the problem. That's the big problem. So I'm gonna show you a couple of examples, okay? And I'll show you another way to determine. I'll show you another way to determine if the stock is overextended. So here, let me show you. What was that stock we were looking at? Do you remember, Raleigh, a minute ago? That was it was overextended, real overextended. Let's see.
Was it
Let's
on
just look at
your? Yeah.
let's
Okay.
just
Go
look at
ahead.
SMH. How about that?
Yeah.
We'll just use SMH, okay? Why reinvent the wheel, right? There was one that I liked, but it was overextended. God, what was it? It was I think it was, you know what? It was Hood. It was Hood.
Oh, so
That's
it
the
was
one
on
I
the
was.
list. Okay.
Yeah,
Yeah.
yeah, yeah. It was Hood, and I said I like it, but I want to wait. Yeah, see Beverly. Yeah, yeah, yeah. It was Hood. Good, 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 good job. So how do you know if this stock is just breaking out, or if this stock is? Let's just assume it's a stock. It's an ETF, but let's just what it is doesn't make any difference for this example. So what we do is we have an indicator here. It's called the Bollinger Width. Okay. Richard really likes this one a lot. I was teaching it to you guys during the live class. And what I do is I put it underneath here, and I simply go back about a year, year and a half, sometimes even a little more. Let's just go 2 years. And I want to see where the low end of the range is, and I want to see where the upper end of the range is. So, for example, let's just say that's the low end of the range. And we don't need to go extreme. We just, kind of say right here, high end of the range, where you still have some stuff on the bottom where it's not completely, but not too much. And you still have some stuff on the top. You don't need to go all the way. You can go a little higher if you want, but that's about it. Okay. That's the range. So, and you can kind of see visually that if the stock is we're almost in the middle, the low is 12 and we're at 26, that's probably a little overextended. You want to buy stocks when they're in the lower range. So, for example, there was another one we were looking at. I think it was XLF. It was another ETF, and it was just kind of grinding. This one right here. So let's just quickly take a look. Both. So we're comparing this. Look at how extended this is, right? And we're looking at XLF. And again, I'm sorry I'm looking at ETFs, but these ETFs actually give us a really good difference in what we're looking at. And again, they're just ETFs. Price is price, right? Where is it? Let's just go back. Let's just do this visually. That's like really low. That's still kind of low. Yeah, there we go. That's good. And then on the high end, say right here, maybe. Okay. See how we're just beginning to move? How we're only at 1.69? We're not at like at 250 or 3. That's not overextended. That's not overextended. So you could do it this way too. If you don't have my tools, you could do it this way too. Okay. So that's number one. You want to make sure the asset is not overextended. Then ideally, you want to find an asset. One second here. Sorry, I'm just looking at something here. Let me see something. Okay. All right. Let's go back to our example, XLF. So another thing, so the second thing, you don't want it to be overextended. The next thing is you don't want, this is a fairly choppy asset. Look at this. You don't want this. You don't want choppiness. Now, I said it's okay. It's not the worst thing, and it's making swing highs or all-time highs. So this is okay. But look how choppy this is. Look how choppy. Compare that to something like Palantir. Directional. Very directional. Directional. Very direct, like glides. Doesn't just do this all the time. Okay. So that's number 2. Number 3, you don't want an asset that's slow. Hold on. You don't want an asset that's sloping too much, even if it's a grinder. You want something like this. Like this. Once you start going too high, it's too hard. There's not enough energy for the stock to sustain itself. Okay? So that's the second thing. So we talked about 3 things now, not 2 things, 3 things. We talk about a stock being overextended. We talked about choppiness, right? So let's just kind of take a look at a couple of these stocks. Not too bad. Not great, but not too bad. Let's see. AMD's fairly good. This is about 8 out of 10. Typically, when you see something like that, or Meta, that's like a 7.5 right there. Let's see, Coin. Look at how well Coin moves. That's really good. That's like a 9 right there. Versus, look at this. See how choppy this is? How all over the place this is? Or look at how smooth Coin is. Very smooth. And I'm going to tell you folks, and I know this may sound a little odd, or it may sound unbelievable, but if you spend some time, real time, looking at these charts, it will become infinitely easier. Infinitely easier. It does take a couple of years, but it's well worth it. And then things will start popping out at you. There's a lot of folks who do this for 20, 30 years, and all they look is technical indicators to a point where I can't see what's on their charts. I'm well, Tim. Thank you for asking. So one of the things that I want to see you guys do is I want to see you guys read price action and not indicators. Indicators are great for very specific things, but they're not they're not going to help you. They're not going to help you 100%. They're going to always be lagging behind. There is no indicator that can predict the future. You know, believe it or not, I talk to people there and I ask them, I'm like, well, do you think this indicator has forecasting ability? They're like, of course. And I look at the indicator and it's got like 15 moving averages. Okay. So we're going to forecast the future by looking back 180 degrees. It makes no sense. Okay, so remember what I always tell you, the clearest lens is by not using anything. The clearest glasses have no lens. They have a clear see-through lens. I've always been telling folks that. Raleigh, you may remember me saying that back from Market Geeks days. I've been saying that for like over a decade.
I know.
that if you want to look and see what the clearest lenses are, it's ones that don't have any color. It's the same thing. The clearest chart, the fastest chart is the one you see with your eye. Okay. Okay, so, and I hope you guys are writing this down. So far we've covered movement, right? Movement. We don't want too slopey. We don't want to buy something like this. We don't want to buy a slope like that. Usually when it's moving like this, the 8-day EMA would have run away with it's running away too much from the 8-day EMA.
Right.
It's just too much. We don't need that. We'd rather wait for a pullback. We talked about avoiding choppy stocks. This is a nice stocks. Avoiding gappy stocks. Using a slope that's not too big. And now we're going to talk about another major factor. Okay.
And, you know, Roger, to that point, several people were asking very specific question about, like, what is that angle of that slope? What's ideal for that?
That's a great question. That's a very good question. Ideally, what I like to see is somewhere around 20%.
Okay.
15 to 30 is like the area. If it starts going too much into the 35 40 percentile, it's going to start sloping up too much.
Right.
Yeah, 22 is perfect. Perfect. I mean,
Perfect.
look, and I mean, folks, you don't need to put like what are those?
You don't put a protractor on it and
Protractor. Thank
measure
you. Thank.
it.
Yeah, you don't need to put a protractor, but just use common sense. Like when a stock is doing this. Look, when a stock is, why does this keep happening to me? I'm the perfect example of doing the same thing and expecting different results right now.
Yeah, and Michael brings up a good point too, guys. You can influence the angle of the slope depending on how far you look, the size. So Roger's looking at what, 4 months essentially?
Average 4 months. I
Yeah,
usually look at 4 months. And then if I'm
yeah.
interested, and I'll look back to see if there's support, high
Hmm.
volume area, all that. But yeah, generally I'm just looking at 4 months. So pretend this is an intraday chart, okay? This would probably be my cutoff right here. This would be my cutoff slope right here. Like this is the end of the line. This is too much. Now you're probably saying, Roger, the difference between this and this is very small. My eyes can see the difference. This would be okay. That would be too much.
Sharp. Yeah.
That's definitely too much. Okay. Okay. So, and please ignore this. This is just a 5-minute chart. I'm just trying to get you to see the angle.
Hmm.
Okay. Uh, and again, you do this long enough, you'll be able to see it yourselves. Not only will you be able to see it yourself, it will come, look. It'll be like a neon sign. Just takes a little bit of time to get there. A little bit of time and a little bit of patience. And again, it didn't take me 30 years. It probably took me to really see it the right way. Probably took me. Here's the thing: nobody was there to tell me it can't be this, it can't be that. So I had to figure all this out myself. So it probably took me about a year and a half, 2 years. But if I had somebody helping me and saying, "Hey, no, 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 I would pick it up in 3-4 months." If you can learn to read price action in a couple of months, then you're doing really, 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 really well. Uh, for everything we're talking about, you want to look at daily charts. Now, there's a great tool that can help you with the slope, and that's the ADX filter. This is the last thing we're going to cover today. Tomorrow, we'll cover more of this. And let me just show you what you could do. Here's what you could do. Let's just go to bar chart. Oh, let's look at GE, okay? I don't even know why GE, but GE came to mind because it has various slopes. That's very nice right here. That's beautiful. Beautiful. That's a beautiful chart right there. So ADX filter, right? 10-day ADX filter. You plop it right there. See how ADX, now this is not, all this indicator does is tell you how slopey the trend is. That's all it does. It doesn't serve any purpose. It doesn't know if the stock is going up or down. All it tells you is the slope of the trend. If you don't have a good sloping eye, you want an ADX that's above 20 and below 40. Above 20 and below 40. You can't go wrong with that. Okay? What if it's sloping down? It doesn't matter. I don't care. If it's above 20 and below 40, you have a trending asset. Isn't that easy when you put it all together? Okay. So I've talked about a lot of stuff right now. Okay. A lot of stuff. For the next half an hour, I'm going to explain it to you in a more organized way. And I'm going to give you a lot more nuggets that you did not get before. This will reinforce your nuggetry. Okay. So I'm going to give you this class, and this is an A-line class. And as I said before, if my children or my in-laws, or which they have no interest in it either, nobody I know wants to trade except me. I guess they don't want. I mean, they're like, hey, we have you. What do we need to trade for, right? You could just trade for us, right? So, why didn't they teach nuggetry in school? Yeah, Bodine, right? Right? Exactly. That's what I say. Why didn't they teach nuggetry?
That would be a hell of a major, wouldn't it?
That would be a major. That would be a major. That would be fantastic, actually. So what we're going to do is I'm going to give you the same class from a different perspective. It's going to take about 20 minutes, half an hour. And I'm going to tell you again, if you haven't signed up for the A-Line program or you want me to do this for you, I could do it. And the results have been fantastic. Really, really good. Matter of fact, we're now approaching our 13th winner in a row. Please pay attention to this. This will reinforce a lot of what we just discussed. And this is one of my favorite classes. When folks at our publishing company and they want to learn how to trade, this is where I take them. Now, folks, complete disclaimer. What I'm going to show you is actually what happened between 724 and 925. The average win rate on live trades has been 86%.